Ladies and gentlemen, good day and welcome to Data Patterns India Limited Q1 FY25 earnings conference call hosted by Go India Advisors. As a reminder, all the participants' line will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Monali Jain from Go India Advisors. Thank you, and over to you, ma'am.
Yeah, thanks, Via. Good afternoon, everyone, and welcome to Data Patterns India Limited earnings call to discuss the Q1 FY25 earnings. We have on the call Mr. S. Rangarajan, Chairman and Managing Director, Ms. Rekha Murthy Rangarajan, Whole-Time Director, and Mr. Venkat Subramanian, Chief Financial Officer. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risk that company faces. May I now request Mr. Rangarajan to take us through the company's business outlook and financial highlights, subsequent to which we will open the floor for questions and answers. Thank you, and over to you, sir.
Thank you, Monali. Good afternoon, ladies and gentlemen. It is a pleasure to welcome you all to our Q1 FY25 earnings call. I hope you had the opportunity to review the earnings presentation available on both the stock exchanges and on our website. Before Venkat presents the financial results, I would like to provide a brief overview of some important updates and key highlights for this quarter. As we review our performance for the first quarter of FY25, I am pleased to report that our commitment to excellence and strategic focus have positioned us favorably, and we started the year on a positive note. During Q1, our revenues have shown a healthy growth trajectory driven by robust performance in our core segments and successful order deliveries. We are committed to in-house development of strategic products which will increase our TAM and allow growth in the coming years. We have strategically advanced up the value chain by developing comprehensive systems using reusable building blocks, leveraging our existing competencies. We have spent 54 crores on new product development initiatives out of the funds raised through QAP last year. Our financial performance reflects the strength of our business model and the effectiveness of our strategic initiatives. We have seen an increase in both our top line and bottom line in line with past. In Q1, our revenue from operations witnessed a double-digit growth at 15%. EBITDA demonstrated commendable growth, increasing by 33%. EBITDA margins during the quarter stood at 36%. We have a robust order book as on date of 1,147 crores. The growth has been seen across all verticals, development orders contributing 53% of the top line and production orders at 43%. The broader context of our performance is shaped by the significant transformation underway in India's defense sector. The government's initiatives such as Atmanirbhar Bharat and Make in India, coupled with increased capital outlay, are driving this change. In the recent Union Budget presentation, our Finance Minister announced an allocation of 6.21 lakh crores for the defense sector for FY25, which is the highest allocation at 12.9% of the total budget. The budget sets aside 1.72 lakh crores for capital outlay to bolster the armed forces, earmarking of 1.06 lakh crores for domestic capital procurement, providing further impetus to Atmanirbhar Bharat. India expects to reach 3 lakh crore annual defense production and to 50,000 crore export by FY29. Keeping the sectoral tailwinds in mind, we are committed to sustaining a revenue growth rate of 20-25% and maintaining margins between 35 to 40%. We aim to capitalize on the following opportunities: focus on fire control radars, expand radars and smaller radars for UAVs, ensuring cost competitiveness with in-house IP in radars. Develop electronic warfare products to meet the requirements of Army, Air Force and Navy. Provide military radios, radio relays and other equipment required for our services. We continue to do product development to narrow the gap between what we import and indigenously what is available. At this point, I'll pass the floor to Venkat for his comments.
Thank you, sir. Good afternoon, ladies and gentlemen. we are happy to present our strong performance highlights of Q1. Let's delve into the overview of our financial results. In Q1 FY25, revenue is up by 16% to 1,104 crores, which was in line with our estimates. Development contracts contributed to 31% of the revenue, production contracts 15%, and service contracts approximately 11% of Q1 revenue, highlighting the diversity in our revenue stream. Similarly, our order book keeps growing and stood at 1,017 crores as on 30th June, which is driven by growth both in development and production orders. The order book today is 1,147 crores, including the orders negotiated in July 2024. More development orders are generating and translating to higher production revenue. Profit before tax is at 43.5 crores, while profit after tax witnessed impressive 27% growth, reaching 32.8 crores. Our net debt-free balance sheet reflects prudent financial management. As of 30th June 2024, we hold over 670 crores in cash equivalents, and investments in liquid funds, underscoring our financial strength and liquidity. Overall, we delivered a strong performance in Q1 and are confident of a steady growth momentum for the full year. With this, we will now proceed to the Q&A session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Deepen Vakil from Phillip Capital. Please go ahead.
Thank you for the opportunity, sir, and congratulations on a steady execution. So my first question is on the lines of, sir, how do you see the new order win momentum going ahead for FY25 as to what kind of what quantum of orders are you expecting going ahead, and which will be the areas where you are seeing new orders to come from?
As I mentioned in the last quarter also, this year we expect overall 4,000 crores order intake, new orders. We have, I think, this about a couple of hundred crores already released. We expect the orders to start coming in from the end of Q2, mostly in Q3 and Q4. That's the order intake we're expecting, and it is totally based on radars, electronic warfare, and these kind of avionics, where we already delivered some products, and repeat orders are expected in all these areas. And mostly it's out of what we delivered products earlier, contracts are expected to follow this year.
Okay. So you also mentioned about the spend that you have done towards new product development. So any highlighting products that you'd like to mention about for the new product development and the kind of opportunity that can arise from that?
It's a bit premature. I don't want to say in open call exactly what products are developing. That is why I've given a brief background on this. It includes a whole range of radars and electronic warfare equipment plus communication systems. This is in line with whatever we decided a couple of years back, that we should start developing products which is today not available in the country, and we're importing these products. And so that is why we raised money. We started spending the money, building products. It's coming out quite well. So maybe next 2 months, once the products out, once we demonstrate, we'll start looking at how the revenue mix can happen after that. It's a bit premature to talk about it in open forum.
Got it, sir. So I have a few more questions, but I'll join back with you. Thank you.
Thank you very much. The next question is from the line of Jyoti Gupta from Nirmal Bang. Please go ahead.
Good evening, sir. Just set of numbers, two questions. One is the emphasis of Elent and the comment. What kind of market are we seeing in this comment and Elent system in electronic warfare? So, what kind of time do we expect in the next 5 years? Second is on your slide 6, I see that there's a certain trend which is given to us where usually the first quarter is weak, followed by improvements in the second and third quarter, and obviously fourth is the best. Do we expect the same kind of trend in FY25 as well?
Okay. I can't be very specific on the TAM brought in by Elent and comment. There are a number of programs which India we are developing with DRDO, and once it fructifies into a production contract, we expect back-to-back orders to come to us. I don't have an exact number, but the number of other inquiries and Make 1, Make 2 programs are happening from Air Force for Elent and comment. There are also airborne Elent and comment requirements coming up. I've not summed the total value, but we are actually working on those areas along with DRDO. With DRDO, we've over the last maybe more than a decade, we've developed a number of products which is world class in both comment and Elent areas. So we expect that that should stand us in good stead and address the market against imported systems as and when the inquiries come. We're already working with DRDO in some of the programs in these areas. So this is an important area for us, one of the important areas. And other part of this is there are two other parts coming to the link in EW, which is the radar warning receiver and the jammer, electronic countermeasures. We're also working on them. So we're working on all of EW systems. We hope that this will all, give us a substantial kind of revenue years to come. But I can't comment on the exact number at the present moment because too many programs are there. We don't know which we will win and where we are going to go. But yes, we are committed to this area of operation. We are investing a lot in these areas. Coming to the second question on how our revenue flow goes quarter to quarter. Traditionally, as a company, we have been quarter 4 heavy in all our earlier pre-public IPO days. More than 80% is quarter 4. With the order book with us for 1.5 years, 2 years visibility of orders, we've been managing to make the order, it's not so much quarter 4 driven, so that we are also profitable in quarter 1, 2, 3, 4. But again, giving like what you said, quarter 1 will tend to be the lowest, and as we go along, hopefully quarter 2, quarter 3 should go up. But this year, we're going to have probably a larger quarter 3 and quarter 4 rather than a quarter 1, quarter 2, as we see it, because the nature of orders we have received, and also on the offtake from our customers based on their production requirements. They are dependent on both, not just the nature of orders, also on which the customer is willing to take at what point in time. So looking at that, I think quarter 1, quarter 2 will be a bit less. Quarter 3, quarter 4 should be higher, is what we see as of now.
Okay. Thank you. Actually, I had a few more questions on the Elent and comment part only because I know these are very important and critical platforms that you've been developing and working on. To seek clarity, call from you. That will be all on my side.
Okay.
Thank you very much. The next question is from the line of Harshit Kapadia from Elara Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity, sir. Just wanted to get a sense on the order inflow which you mentioned of 1,000 crores. Would it be largely driven by product or would it be driven by the developmental part for this year?
I think this year it will be driven by earlier products which were delivered. Repeat orders expected now. Maybe some of the development which you're doing now can also pan out to become orders. We will know this towards the end of third quarter or fourth quarter. But what we have in mind is mostly towards already designed products and repeat orders have to come.
And when you say repeat orders, would you be able to give a sense on the system? Will it, let's say on the radar side, are we talking about the Ashwini, Rudra radars, all those systems?
See, Ashwini, it's a competitive bid. So we do not know which version we'll get. That is why we don't want to go contract specific because we don't have control on the market. So we have a bunch of contracts which we expect. We expect that some of them or most of them should come our way. There are some specific contracts which we have developed as a unique vendor. Hopefully when that happens in a repeat contract, we should get back-to-back single vendor contracts. So we have a bunch of them. I don't want to get into exactly which contracts because I'm not in a position to exactly say when what will happen because this is government-driven orders. So I don't have absolute control on the timing nor on the contract. But we have a bunch of contracts. We expect that we should get 18,000 crores kind of new orders this year going ahead.
And the contract size, would you be able to give us a sense? Will it be like sub 500, any one which could be let's say 500 crore plus, any one big order?
No, it all depends on when competition begin. It can be sizable order, but we're not looking at that kind because when a tender comes, we can't predict the outcome of a tender, an open tender. So we don't consider when I make a commitment on behalf of the company on order expected. We normally go not covering the tender contracts where we have a probability, but we're not sure we will get it. So when we give an estimate, it is more on what we already developed and what we expect as single vendor contracts. The other things may happen. If it happens, it becomes additional over on top of this whatever we projected to you.
Okay. And given the current visibility you have, even for FY26, would that 1,000 crore run rate continue, or do you think any spurt can happen? Because we were also looking at integration in a bigger way rather than just being a component supplier or a subsystem supplier. So anything on FY26 which can come to us?
One thing which we are doing is slightly different from others is that we are developing products for future. That is why we raise money and also we are retaining money instead of giving a dividend. Retaining money because there will be a lot of product development going ahead and also infrastructure development to address future manufacturing requirements. We will be spending on capex both on development as well as on actual infrastructure. So the idea is to scale the company substantially from what kind of course we've been doing. See, the market size is very, very large. And we're used to importing these systems in various countries. Government is very clear that this cannot go on, and we are putting a lot of policy in the framework to see that it is truly made in design in India. It's an Indian content. Year on year, we increase in Indian content percentage as a mandatory requirement. With all this, our idea is, since we have specialized for many years in building component subsystems for a large part of the systems all these years, we decided that we build the complete system ourselves. And that is why we have committed ourselves and raise money, and we are in the process of development. Development is started. We are building the products. So as and when the products become available and certified and flight tested and things like that, the expectation is that it will also substantially increase our order intake. Idea is to increase the TAM very large to 10,000 crores at 20,000 crores of TAM. And so a percentage of that we should be able to get an order. We also look at very, very high-speed growth coming in the coming years. That's the reason we're looking at it. So I can't specifically talk about the 25, 26 or 26, 27. There's a series of products we're doing. It's not one product. It's a bucket of products, a bunch of products we're designing. And all of them will make, look at the address of the core market. So that is what, other than the competitive bids which we participate in, these are all, what we're doing development is uniquely different from what is already available in India. We hope that it will pan out properly. That is the commitment which we are developing products.
Fair enough, sir. And another question is on, we have been probably one of the companies who have developed seekers for the BrahMos missile. So have the final selection done between you and the other PSU company who have also developed our products, or is it still some final conclusion is there, and when the results are expected to come out?
Seeker, I think government is talking about it now.
Okay.
But we don't have an active inquiry at the present moment. We expect that, considering that they've got a lot of orders now, and looking at not importing Seeker and making in India, we believe that we'll get an opportunity shortly to address that requirement. As of now, I can't comment on it because we haven't told the contracts at hand. But we expect that going ahead. Our belief is that we should be also having contracts going ahead.
So the contract will get split between you and the PSU, or there's only it's like one take all?
It's expected. Obviously, we have two vendors, so both the vendors should be considered is what we expect.
Okay.
But, I can't talk for the government. So we are talking future, and I really can't talk for the government. But we are hopeful. Let me say that we are very hopeful. We have a good product, so we are hopeful that they should hear from us also.
Sure.
So as it happens, we'll announce it once it happens.
Fair enough. Okay. And this last question on radar, there has been a development on the Uttam radar, and there is one private company already there. They are also looking at more companies. Would Data Pattern be participating in that, or will be staying it out?
Yeah, I don't know whether they are really looking at another vendor and all that. I don't know where you heard this, but I'm not aware. Such requirement. Definitely, there is one vendor and also there is an imported vendor equivalent for this. But the opportunities are very large. There are other platforms, and also if better products are available, maybe somebody will consider that. We are addressing these areas in new products. But the outcome is not very sure. But yes, we are seized of the requirement and trying to see what we can do. We can do a world-class product in the requirements. We working on this. Product development is on. But I'm not very sure what you're saying is. I can answer that question. But yes, in a general category, we're addressing that and looking at products which can be world-class in this category.
Fair enough, sir. No issues. All the best for future, sir. Thank you.
Thank you.
Thank you very much. The next question is from the line of Kaundinya from Jefferies. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. Couple of questions. The first one, continuing from the previous participant's question. So just on the Sukhoi upgrade program, I think we understand there is also a plan to upgrade the radars as well, this Virupaksha radars, which are also kind of an extension of this Uttam radars and all. So just trying to understand, if there is an opportunity for Data Patterns to participate in this, if not just specific to radars, what is our total opportunity size that we can address in this total upgrade program? If you can provide some color on that, please.
Yes, so we are interested in this security upgrade program. We are trying to develop products in these programs. We don't have an order and inquiry. We are trying to develop products in this program because the program becomes very large. I don't know how the selection process will be going ahead, but we want to be part of one of the participants in this program. So towards this, we are doing a lot of investments and building products.
Mm-hmm. Sir, we understand that the radar for Sukhoi upgrade program is an extension of Uttam radar and modification of Uttam radar. Correct us if that's wrong. So just trying to understand if that were the case, will that be an open tender basis or will it again go to your peers on a nomination basis? How does it work in general?
You are talking about a future program. How can I comment on it yet? These are all government initiatives. I can't talk for them. No. That's why I said we know about the requirements. We understand the requirements are large. We are committed to working to providing solutions and products in this category. How government will react, what will they do, I really don't know. Obviously, we will try our best to see that part of it or all of it comes to us. This is our interest. Because these are all the areas where we have very strong competencies. So obviously, we will try to do our best to see we get something in this. But future will say what really happens. But we are investing ahead of these areas. That's all I can say now. I won't be able to talk on behalf of the government of India.
Okay.
You understand that, obviously.
Yeah, I get it.
We are your division. So we really can't, or HCL division. So the three large players in the division. And definitely, I'm not a player in the division. I can be a contributor to our division making based on the product capabilities.
Fine, sir. That's understood. So my second question is on the order flows. I'm not sure if you have already answered this question, but in this quarter we saw a dip per se on the order flow front. So just trying to understand, is it something to do with the timing mismatch, or how should we look at it? First, if you can help us understand that, please.
The order flow is a bit delayed. We expect the orders to happen in the first quarter, fourth quarter now. We would rather have it in the first 2 quarters, obviously, but that has not happened because there are certain trials being undertaken, and the decision making is a bit delayed. We hope that we come properly in France and we get the orders in the third or fourth quarter. So there is a delay, but we do believe that we will get the orders as we committed earlier to you. That will happen. Maybe towards the second quarter, something should start coming, and third and fourth quarter we should get a larger order. That's what we think.
Okay, fair enough. So, sir, if I may ask one last question on the margins in this quarter. I mean, we saw a good jump in margins. Is it something to do with, a greater share of your service orders and the production orders in the execution mix, and therefore the margins? How should we look at it? If you can help us provide some color on that, please.
The margins, as we have already, as per internal estimates, margins varies with the contracts we execute. We have been quickly changing this. It depends on the contract. Some contracts where IP is very high, where we don't import anything, we design everything from scratch. Then what happens is our margins are higher. Sometimes we have to integrate, then the margins become lower. Sometimes because of competition in an area, the margins tend to be lower. So it's a mix of programs. So we believe that these are sustainable going ahead, depending on the contracts we execute. Idea is that since we do all the IP development in India, and we import very little, actually we don't import except components, we don't import at all any systems and subsystems, or even building blocks to make in India. The margins look to be better for you. More importantly, what none of us are looking at is that these are being developed couple of years back, 3 years back. Every year we invest in product development, and we write out the product development as part of the revenue expenses. We don't calculate it, so we don't see all of them. But this is a longer term play and developing products. So when the production order starts coming in, you see the bottom line is picking up. That's what you see what's happening. But this has been the way we've been building products all through our life. It's nothing new here. Going ahead, we do large systems where some systems have to be procured and integrated. Obviously, the margin profile will come down, but the size of business will be higher. So we need to look at how to scale the company substantively. But we don't want to look at the low margin, normal run business. We want to be IP-driven business. And towards this, we are spending a lot of money in product development. That's why we went for QIP also. You see that we build the products, which is 100% designed in-house. And we build not just the electronics, we build the mechanicals. We build all of those things, design all of them, so that the complete control of the entire equipment is with us. That's what we're trying to do. It's tough, but we've been working on it for many years to build a capability like that. And we want to strive to build more capability to see that we build that all the entire systems in India, and not look at buy and make. Other than that, we want design and make is what we're trying to do.
Sure. And sir, just last question. So this kind of surprise was already penciled in when you gave 45% margin guidance for the year, right?
I didn't do 45%. I'm talking on behalf of putting more words in the mouth. I'm very worried that you say that thing. I didn't give 45%. I said 35 to 40% is what I told in the first call in, I think, May. I said 35 to 40%. I would rather say something and beat my estimates rather than say something and fall back. So I didn't say 35 to 40. I never said 45. I don't know who said it.
Fair enough, sir.
But I would love to do 45. Definitely I'd love to do, but if that's what happens. But today, we have to look at what kind of mix of orders we're going to contract, And this, we made a budget for the board, and we will be looking seriously how to build as we go along. But basically 35 to 40% is what we're looking at.
Sure, sir. Understood. Thank you very much and all the best.
Thank you, sir.
Thank you very much. The next question is from the line of Pawan Kumar Gajwani from Citi. Please go ahead.
The question is around, I'll go to slide number 28. There is an increase of around 400 million in intangible assets. Can you just help us elaborate on this increment?
Can you come again? Your voice is a bit not very clear. Can you repeat it, please?
Yeah, on slide number 28, there has been an increase of around 400 million in intangible assets. Can you help us understand this increment about?
See, what we are doing this time, unlike earlier days, is that we are doing substantive product development. So we have taken about trying to close the market. We are trying to build products not against contracts. And that is how we feel that how do I increase the total addressable market from 2,000 crores what we are addressing now to 15 to 20,000 crores. We have to scale the company to 2,000 crore company or a 5,000 crore company. I need to be able to have products to address the market. The other way is we tie up foreign OEMs, bring the product to the world share and look at the lower scope kind of thing which everybody else is doing. Against doing that, we decided let us build IP and build the product here. But then have the products. These products are to be demonstrated, flight tested, go through certifications, participate then in tenders and then try to win contracts. We do that. Our cost is much lower than a competitor who imports and integrates. So we have a flexible margin, so we will be able to address the market. Maybe more competitors is what we thought. And since we have done a lot of product development earlier, we use building blocks to try to reduce the risk of development and also time frame to develop the products. Accordingly, we got clearance to go and got the PAP done. So once we started doing this, product conceptual development took some time, how to do this, the design fundamental principles. Now we have started building the products. So these are all now shown as an intangible asset. Most of the intangible asset will be 80% or 85% will be terms of inventory, materials which is bought against its programs and products, and it is getting converted into actual products. So these are all at the present moment shown as intangible assets.
Thank you, sir. This helps us. Thank you.
Thank you very much. The next question is from the line of Amit Mahawar from UBS. Please go ahead.
Mr. Anvadan, I just have one question on...
Amit, can you come a little more closer to the device? You're not audible.
Is it fine now?
Yeah, much better.
Yeah. So I just want to understand in FY25 and 26, seems your business with HAL and BAL is still very significant. You have any impact of any potential delays, especially to HAL when you supply mission computer and avionics for Tejas and other platforms?
There are delays. We hope the delays will continue and they pick up. We have orders to hand. There are some delays in accepting deliveries. We have been talking to them as long as, and so since there are some delays, we are trying to deliver some of the products so that our commitment to our board and what we've done is actually being delivered. We are mixing products and delivering. I don't know future how long the delay will be. So I don't have an idea on this. We hope that the delays will continue and we will deliver.
Sure. My question was more around, my question was more to understand for you, in case there is a potential LD on HAL, I don't know, for potential delays, how does it impact you back to back?
LD on HAL has no impact on me. If we deliver delay to HAL, then there is an LD with HAL, charges on us, then there is an issue. But here we are ready. The delay may be an acceptance or whatever can be based on the manufacturing needs. We will not have any LD on those days. So I expect that it happens and very surprised.
Very, very clear. Very clear. Second and last question is more on your revenue, particularly from these two PSUs plus your exports in 25 and 26. You've been a large, one of the decent component exporters to the Western world, both Israel and potentially, if I'm not wrong, some other European buyers. How do you think your exports will move in 25 and 26?
Firstly, the market is opened up, huge market opened up in India. So our focus is on the Indian market. From earlier, we were using with DRDO building blocks and subsystems and selling to DRDO, and then developing with DRDO rather. When the production order happens with PSC, we get a part of the production order and basically what we design. This is the model. It continues to be a model. Only thing we try to do a larger portion of that with DRDO. But we are also now scaling to directly address MOD requirements. There you cannot do part of the system. You have to build the full system because tender requires you to show the full system. So towards that, we are developing products and the various category of make one, make two kind of things, and participating in tenders and trying to win tenders. So that work is all and so on. These are typically larger orders because it requires directly to the users and the full system. So we are trying to do that. This is mainly the focus area of what we're doing. And what we're doing now is developing products against this OEM requirements, direct requirements from Army, Navy, Air Force, and also where some upgrade programs are happening, whether we can do part of the upgrade by building our own products instead of relying on import technology. So these are two areas we're trying to really fundamentally develop products and get our growth. That's the main area. But yes, we've got the contracts from abroad. And it's mainly from, we've not got much product orders from Israel. We've got, earlier we used to develop products for a UK company. It's a worldwide defense OEM. So we continue to build that. In 2013, we've been delivering our design products there. And that is found favor, and they're getting a lot more orders. Back to back, the orders are increasing to the UK company, and we do delivery, monthly delivery to this company. Even during COVID, we are delivering monthly. They're very happy. So we continue to get some contracts. We also participated in some requirements in Europe as well as in South Korea. We received some radar orders from them. It will be designed by us in India, and we'll be exporting it. It's going to start in maybe 3-4 months. We should start. We're just getting export clearance from government, so we will start doing that. So we will do this. Probably about 100 plus crores of orders we have, which we'll execute during the course of some of them, most of them we get to this year. We expect more orders to happen from UK in 2025, because more orders will happen. But at the moment, this is not a very large percentage of our order book. It's probably 10-15% of our order book at the present moment. So, but going ahead, we would like to do more of exports. But presently, the focus is India because the opportunities are very large and real here. And but going ahead 3 years, 5 years from now, I think we will focus on outside India opportunities and also focus. Once the full products start coming out, there'll be opportunities what we design and do here. The same thing is usable across the world. So we will start diversifying outside India as we go along.
Sure. Any, can I have a quick last one, if you allow? Yeah. So any developmental, in terms of 1,000 crore this year, and whatever we expect next year. So in 25 and 26, any specific developmental significant orders that we should think in mind for data patterns? I'm sorry if you mentioned this, sir.
See, what happens, we're looking at 1,000, 2,000, 500,000 for orders. We hope that 1,000 growth will happen. Each of them happens this year, which happens next year, I'm not very sure. So we will have an idea, but there's no control over delays. So that's why I said. But largely, these orders, as I see it, is all already developed orders. Of course, see what happens in all of them, though this developed, which in fact repeat exactly is not 0-1 repeat. Some customization also happens. So some development takes place. So these are large contract orders, large size orders for us, and very important to us. So we classify in production orders because the development content is very limited. So, but mostly it's a repeat contract what we're expecting and what we already delivered.
Okay. Thank you very much, and good luck, sir.
Thank you very much. The next question is from the line of Gaurav Uttrani from IIFL Securities. Please go ahead.
Thank you for the opportunity, sir. Sorry for if I've missed the question, sir. We've seen a material decline in order inflows for FY24 and 1Q as well. So going forward, in which segment, like we are expecting a major inflow, and how our order inflows look like for FY25 and similarly for FY26?
As this question was asked earlier, we're expecting probably an order intake of 800,000 crores this year. This is FY25-26 is what we expect. We got some orders in the first quarter. The order intake has been a bit delayed than what we would like. But I think towards Q3, Q4, we should start getting the orders is what we think.
So would it be more towards the development or production orders? From that?
This is mostly the repeat orders of what we delivered earlier.
Okay. And so there's, sir, two mentioned categories like underwater in the order book, and one is tank. So what sort of products we are actually supplying in this, and who are the customers? I think there is a contribution of around 3 or 2%.
Can you repeat the question, please?
Sir, in the order book, we have mentioned there's a breakup of underwater and tanks, like contributing around 3 and 2% respectively. So which are the products and who are the customer in this segment?
The tanks means it will be DRDO, CBRD. We're doing some work for them on some missile loading systems. We got an order that is under design, and hopefully we should deliver this year. And for underwater, we work with a lab called NPOI and NSTL. There are two labs in DRDO. We do underwater sonar and torpedoes and things like that. We work with these labs for quite some many years, and we have some orders from NPOI, which we're executing. Again, fully designed by us solutions for NPOI. So I don't want to get into which exact product because they may not give an NDAs we sign with them, and they may not like us to disclose in open public what we develop with them. But underwater, we work with two labs.
Okay. Okay, that's all from my side. Thank you.
Okay.
Thank you very much. The next question is from the line of CA Garvit Goyal from Invest Analytics Advisory LLP. Please go ahead.
Hello, am I audible?
Yes, you are.
Good evening, sir. Congrats for a good set of numbers. My first question is, I was checking your previous earning presentations where you used to guide for 25 to 30% top line growth. Then it got reduced to 25%, and in recent PPTs it is 20 to 25%. So further, if I look at Y-on-Y growth last year and this quarter too, we are showing only 15% growth in our top line, and same numbers are there for bottom line if I exclude the interest income which we are getting on the QIP money, right? So my question is, what is wrong in the terms of executing the order book? Are we facing any challenges because of which we are not able to meet our own guidance? Kindly put some color on this. And secondly, like a previous participant also mentioned about delays in supplying to the HAL, right, due to some engine supply falling short from GE. So how do you see this is going to impact for our next 9 months, sir?
See, I don't remember saying 25 to 30% even the previous quarter. I've always said it's 20 to 25. I don't know how it became 25 to 30. So I'm not changing my guidance. What I did say last quarter, if I remember, the top line growth is 20 to 25, but we maintain a 30% growth in the bottom line, is what we said. And somebody was asking the arithmetic doesn't work out and all that. I also answered the question. So we expect a larger bottom line growth than top line growth, is what we said. Top line may grow, but at the year top line growth is 20 to 25. We have a 30% bottom line growth is what we mentioned, as I remember last time. Anyway, coming back to this on the flatness of quarter one, quarter two kind of thing, and why the revenues are not growing. This depends on the contracts which we have and which is executable for the quarter. Sometimes what happens, the customer doesn't want the delivery. There are two parts to it. One, whether we can deliver it within the time frame of quarter one, quarter two, or second is whether the customer wants it to be delivered. So in these cases, there are large contracts which we can't develop and deliver in 1 quarter or 2 quarters. It takes a year and a half. So we also projected it to be end of this year or next year some deliveries, the large contracts happening. Development is happening there. We are going as per schedule. Again, we could deliver a few products, but there is a customer acceptance delays are there, so we could not deliver there. The products were ready. So again, because there are acceptance issues in terms of customer requirements. So this is what I was telling the last Amit, he asked me this question. So this is something which we can't control. What we need to have is a larger order book and more product with, manufacturing. So if there is some other product don't go, we kick in with some other products, which is also ready. This is what we are trying to do. We have an order book, and we expect some contracts to happen. Sometimes we take advance action on products we expect which can quickly deliver the customer also even need. We try to push it through. So we have to do all this to see that the revenue model is and the delivery model is happening properly. But our model, if you take data patterns, traditionally we've been a Q4 focused organization and delivery. We managed to make it Q1, Q2, Q3, Q4. You see, Q1 will be smaller, Q2 will go gradually up, and Q3 and Q4 will be the largest kind of delivery will happen in Q4. But that is in line with the government procurements. Normally, we use Q4 centric with that. In production orders, we are able to actually send something in Q1 and Q2 in line with what we expect. But this is largely what it is. And I did tell somebody, one of the other callers, I said that this year with Q1 and Q2 will be slightly more, it will not be growing very fast, but Q3, Q4 is going to be our quarters this year, is what I said. But even if some delays happen with the customer, I don't think it should affect us because we should ship some of the products the customer wants. There are other requirements which can get shipped. So we focus on areas where customer wants deliveries and put our effort there. Is what we're thinking. But I don't think all contracts are like this. One or two may happen, which especially with some government customers, some delays may happen. But that should not affect us largely. Our internal plan is to see that doesn't affect us.
Understood, sir. Secondly, sir, you mentioned 1,000 CR order inflow this year. So is it for FY25 or FY25 and 26 aggregate basis?
It's FY25, 26. Whereas 24 current financial year, the next 10 months is 9 months is what we're expecting. Some orders are already coming. Some orders are quoted, which come in. Some are yet to quote, and pretty should start happening. So we have a list of orders which we expect to happen. So that is why it's an 18,000 crores, so we should have an order intake.
Understood, sir. All of my questions are answered. Thank you very much, and all the best for the future.
Thank you.
Thank you very much. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please limit your questions to 2 per participant. The next question is from the line of Abhishek Singhal from Naredi Investments. Please go ahead.
Good afternoon, sir. Thanks for the opportunity. Sir, my first question. In Q4 control, our 2 contracts delayed due to inspection not done by a customer. So what is current status? And out of this, how much we booked the revenue in Q1?
I don't want to give you those specifics, Abhishek, if you don't mind. It's an open conversation. I don't want to be so specific in which contract, which customer. That will not be taken in good spirits or good by the customer or the market. So I won't answer that specifically. Yes, these are all happening. Whatever we told you issues are there. So far getting addressed, and on the other things are getting shipped. And we are in touch with the customer and things are getting shipped. We're trying to see that it doesn't affect our delivery mechanisms by having other contracts, other products delivered. So it brings a mix, and so we're also internally discussing how our manufacturing has to be done to see that if there are going to be some, rather produce more and dispatch better required. That is the strategy of following, so this should not happen as a regular feature. So we understand, but it's not correct to get into very specifics on these areas. I hope you appreciate it.
Okay. And sir, second question. In Q1, our revenue from service segment is 11%. So going forward, what is revenue split for FY25?
Overall, the full year it will be around 10 to 11%. But Q2, Q3 will be slightly lesser. But overall year it will be 11%, 10 to 11%.
Okay. Thank you so much, sir. That's all from my side.
Thank you very much. The next question is from the line of Manan Vandur from Walford PMS. Please go ahead.
Thank you for the opportunity. I just wanted to clarify one thing. In the opening remarks, you said something about exports to be 50% by FY29. Did I hear that correctly?
Okay. I was talking about Government of India, their notification. They said we need to export 50,000 crores by 29. These are all statements made by our government representatives, not mine. I'm just repeating that the opportunities are large. Government is thinking of large opportunities to create it, and manufacturing and defense requirement is either the exports or consumption in India. Large requirements. We're only talking about that.
Correct. Okay.
Yeah.
And in the presentation, the capex is mentioned as around 150 crores over 2 years. So will you be able to specify what are you spending it on?
Because actually the past few years of capex is not a decision, but we plan to augment our capex to the need of contract specific requirements whenever we get a contract. Probably we will be spending another about 150 crore plus over the next 2 years. That is the plan.
Okay. And in the opening remarks, sorry, I missed one more thing. What is the total addressable market for the current product portfolio that we have?
Actually, we don't look at it like that. This is a very difficult question to answer. Traditionally, we have been building subsystems with DRDO, and there are specific opportunities to address. And those opportunities will get converted from production orders based on BEL and HAL's production back-to-back we get. Then we look at the opportunity in the future. But again, there will be delays with that, and this is how we've been going. Continue to do that work. But of late, what has happened is because of the imports being not preferred by our MOD and services, PMO has stopped that. So there are a number of urgent requirements coming up with the services, and those back-to-back such urgent requirements, and DRDO has to deliver quickly. So we are able to actually deliver some systems quickly to DRDO to address this requirement. That few things have come up very handy for us because we can do all of those systems in-house. So that has been happening. So I can't give you just a touch on exact time, what is it presently and what we address in percentage. It's not working like that. But what we have started doing is to address questions like this and also build strategy in the company. We are looking at specific opportunities, which is visible opportunities coming from MOD now. And we have jotted down the visible opportunities where the players are not very many, and we need to be designed in India opportunities. So towards addressing those opportunities, we raise money to build products, which is what we're doing now, present engagement. We look at those opportunities. It will be a 20,000 crore kind of addressable market, total addressable market. We hope that we are able to participate in those markets, address those opportunities, and convert them into revenues. This is the intent. We are working towards this intent and developing products in these areas.
Okay. Thank you so much. That's it from my side.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in conference, please limit your questions to 2 per participant. The next question is from the line of Aditya from Sowillow Investment Managers. Please go ahead.
Hi. Thank you for the opportunity. My question is more on the lines of the subsystems. I understand that your intent is to have IP and develop the products in-house. But when it comes to the subsystems of your system, how much of it is, say, locally procured, and how much of it you're dependent on imports and your resilience to, say, global supply chain shocks?
We import all the electronic components. We design the printed circuit boards. We design the mechanical parts. Some mechanical, some drives or some sensors in the mechanical may have to be imported because not made in India. Largely, we try to do Indian systems. So other than some electronic components and very complex printed circuit boards, which we need to get it done from abroad, design being done by us, rest are largely Indian. Very few components, maybe some encoders and things like promotion systems. They come from abroad. We don't make the encoders in India. So whatever is made in India, we try and maximize Indian content. Import is a low cost portion of our overall cost structure. And of course, electronic components are the major import components which we do. That is all done in India.
Okay, and in your opinion, is there room for sabotage, in terms of if somebody is able to, track your supply chain? Is there means that components there is room for say backdoor, some kind of a backdoor entry?
Meaning sabotage, I understand. Backdoor entry
backdoor entry as in access to your system, access to data, which is passing through your system.
And the one thing we have very strong, before we even, when we went 15 years back, everything was rented in our company. Table was rented, furniture was rented, computer was rented, air conditioner was rented. The only thing we had is IP. So there we had firewalls. The one thing we protect is firewalls. We extensive amount of firewalls and mirrored servers, offsite servers. We do a whole lot of stuff. And we also signed with IB does an audit with us. Because with defense, we're very high up in the audit as well as the IP protection. We don't host our servers in cloud. We host it ourselves. We don't have anything to do with the outside world because we have everything inside. So we manage our IP fairly well in our office also. So that is one that we don't expect much of attacks about it. We immediately take care of it. And second, it's limited to the front line and it doesn't go into our backup servers. And the access is very limited even to our own people. We access rights and who can access. We have a lot of systems to do that. And we also have third party coming and hacking our systems to find out whether they are okay or not okay. We do this consistently, see that there is resilient network in our office and firewalls. And having said that, the other thing is what we import as a component visibility. I think there are sites which, government publishes that import is happening here. Those kind of information is public. What is public is public. But not out of us, it will not go to public. And anyway, we buy components from registered suppliers. We don't go to traders as part of our defense requirements. We cannot, and because certification of components necessary, conforming certificate necessary, we need to ensure that every batch, when I fix last 15 years, which components come from which batch, which Intel component we store all of them. Because if any failure happens, we need to know which batch is failing and what is the defect mitigation procedure. So it's a very deep process in all these things. So I think we're not complacent. We understand this is happening, but we're also addressing those requirements.
Sure. Thank you.
Thank you. Ladies and gentlemen, as there are no further questions, I would now like to hand the conference over to the management for closing comments.
Thank you. Thank you for joining me on this call, as I said during the opening remarks, we want to build an organization built on IP, and we're going ahead to build large products, very, very complex products in radars and EW and in communication systems. We're looking at what is being imported into the country and trying to say, can we build this in India? We've been doing this for many years, so we have a competency model which we are improving and building products here. We also have a number of engineers from 400-500 people. Now we have more than 900 engineers working in the office. We're taking fresh engineers and training them. We are also creating infrastructure to see whatever development is done. The production also will follow quickly if the order comes next year. We're in a position to deliver on those things. So this is defense and aerospace systems. This big systems is a long-term play. It is not, we need to have an order book for 3-4 years to see that we scale the company. Today we're talking about 1.5-2 years of order book. We're trying to see that we build products, we get an order book that is at least 3 years so that we scale the company. We hope that we'll do this in the next 2 years to 3 years' time. But we want to substantially scale the capability. The opportunities are large. We have built up competencies. We want to address the opportunities, take it by the horns. We're very bullish about this. We hope we're able to achieve what we want to do. But the effort is on to build pretty large organization going ahead. Thank you very much. Thanks for your patience in this way. If anything further you want to call, ask, please address it to Go India. We are our partners here. They will get all the answers to you in time. Thank you very much. For this.
On behalf of Go India Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your line.